And it's a beautiful Tuesday morning right here in Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live from Channels HQ. And welcome to the program. I'm Ladi Williams. Let's kick off your morning now with markets. Now we'll see oil prices with little change earlier as supply worries have set recession fears and China's commitment to its zero COVID policy. Brent crude rose 7 cents to $97.99 a barrel, while U.S. West Texas Intermediate crude, WTI, rose about 7 cents to $91.86 a barrel. We're going to be drilling down on what's driving that market later on in the program. While Malaysian palm oil rose for a second straight session, gaining 1.7% on support from strong demand from top importer India. Although China's denial that it was considering easing its zero-COVID policy capped the gains, the benchmark palm oil contract on the Bursa Malaysia Derivatives Exchange closed 73 ringgit higher, about 1.7% to $937 a ton. The contract climbed more than 9% last week. And the Federal Inland Revenue Service has appointed MTN, Airtel, and commercial banks to collect value-added tax charged on all taxable supplies made to them and remit to the agency. In a statement released, the FIRS says the new policy takes effect from January the 1st next year. The FIRS said the companies are expected to remit tax they would withhold on or before the 21st day of the month, immediately following the month the tax was withheld, in a format prescribed by the service. Meanwhile, the agency mentions that it has put in place adequate measures to ensure prompt payment of refundable input tax under the new arrangement. And the Nigerian Exchange Group is internet and technology ready, and that's according to President of the Chartered Institute of Stockbrokers, Mr. Oluwole Adeosun. He made this known at the reopening of the exchange for its first physical trading since 2020, where he highlighted some of the challenges affecting equities trading on the NGX. Take a listen.
The stock exchange is what we call the barometer of the economy. The economy now is rather challenged by a lot of factors such as foreign exchange, factors such as the interest rate, factors such as logistics issue. All these have combined to even look at the fiscal and monetary policies that have been in place even this year. All these factors have combined to have an effect on the level of transactions that investors have done through the equities market.
Welcome back. Well, now let's see what's happening in the commodities market. We have Dumebi Oluwole, analyst, financial derivatives company, join us now to bring us up to speed. Dumebi, great to see you again.
Thank you.
And a lot has happened since the last time we spoke in these markets. We see investors patiently expecting China to potentially ease the COVID-19 restrictions. That's zero COVID policy.
Yes.
That's a big one.
Yes. The markets are expecting that China would, potentially ease its lockdown restrictions. China has had a very stringent lockdown restrictions since COVID resurfaced in the country. We have top cities in the country like Beijing. They were on really tough lockdown restrictions. People were not able to move around, and that potentially disrupted the global commodities market. And that's because China is a main importer and exporter of several commodities. When it comes to oil, China is the largest importer of crude oil right now. So with the lockdown restrictions from China, that had an impact on oil demand, and that kept prices high. But right now, rather that kept prices low. We had a huge impact on oil prices. Although the fact that supply received some level of pushback from OPEC. We saw that the net effect of that was that oil prices remained within $90 to $95 per barrel. But with China potentially, easing its lockdown restrictions, we're seeing oil prices prop back up around $99 per barrel. Some analysts even are projecting that oil prices could near $200 per barrel, from $150 to $200 per barrel because of this decision by China. But I mean, the markets are still having mixed signals. So we're seeing the expectation is that it would be a gradual thing for China to come back to the market and increase demand. It was going to be gradual, and then we'll see that have a gradual impact on prices. But there are also some, there's another school of thought that believes that China is going to, ramp up demand too much, so because of the fact that they were on a lockdown, a long lockdown period, and so they would, there's going to be like a huge influx of demand that would push prices higher.
And obviously, that's not good for the inflation story.
Of course. The energy crisis, like what the world is experiencing today, this is the worst energy crisis in over a decade. So the expectation is that, if China increases demand and oil prices edge higher, oil prices, it's going to potentially have an impact on the energy crisis that the world is currently experiencing today. So countries or regions like Europe that need as much oil as they can get right now because of the fact that they're entering the winter season for heating, this is going to definitely have an impact on them getting as much crude oil as they can. But for oil exporting countries like Saudi Arabia, it would be a good thing for them because they're going to rake in a lot of more money. I mean, Saudi Arabia they're set on course to make the most money they've made in over 5 years. But for a country like Nigeria that is having a huge shock to oil production, we're supposed to be benefiting from oil price, but because our oil production levels are significantly lower than what it's supposed to be, we're not generating as much money. We're not generating as much income that we should be generating, especially looking at the current state of the country, with the fact that we need as much forex as we can get to stabilize the naira.
And I'm sure, at the COP27 going on right now, they wouldn't want to hear, much more demand coming from China at this point.
COP27, yes, we're trying to focus on climate change, but we cannot overrule the fact that fossil fuels are still going to be in demand right now. The transition towards renewable energy, yes, it's a big deal. We're seeing countries, they've come up with a lot of targets. Okay, but by 2023, we're going to stop using fossil fuels. We're going clean by 2024, by 2050. But the truth of the matter is that with this huge setback to the adoption or the adaptation towards renewable energy, with everything that's happening with the energy crisis, fossil fuels are still going to be around for a pretty long time. I mean, we're seeing some countries in Europe going back to the dirtiest fossil fuel, which is coal. So clearly, this was a huge shock to the entire world, and clearly points to the fact that the world is not yet fully ready to completely transition to renewable energy. We're still going to see some talks about it, but as at this moment, fossil fuels are not going anywhere. So yes, I believe that the idea behind the COP27 right now that is happening is just to reinstate and reemphasize the fact that we need to be aware of climate change. We need to be aware of the fact that we need to adopt cleaner sources of energy. But that doesn't completely offset the fact that the world is not fully ready to completely transition to renewable energy and just stop using fossil fuels. I mean, and this energy crisis it just exposed all of that. And for especially emerging markets, low to middle income countries like Nigeria, the transition is still going to take a really long time before we completely, move towards renewable energy. But like I said, it's just to reemphasize the fact that there is such a huge thing as climate change that if we're not careful, our continuous use of fossil fuels will just take us, it's just going to aggravate the situation.
And there's also that chatter about compensating poor countries, to help with the energy transition. That's from, the richer nations.
Yes, I mean, we're seeing that happen. Nigeria has received some level of support, I think, from the US on this particular issue. The World Bank is saying stuff about it. The IMF is saying stuff about it. The United Nations is saying stuff stuff about it. The AFDB is saying stuff about it. But that doesn't, like I said, it doesn't change the fact that low to middle income countries right now are not ready right now to completely adopt all of this. We're going to start up things.
For
we're
that
going to
just
see,
transition.
For that just, I mean, we're going to see startups, come up to say, I mean, we've seen startups like Daystar, in this region. We're seeing that so many things are happening in the renewable energy space. Shell, the big oil tycoons are acquiring and also merging, partnering with smaller startups in the renewable energy space to make sure that this thing that we're seeing, we're making progress in it. But like I said, it's going to still take some time because these countries are not fully ready to completely transition. We're still having issues with PMS importation. We're still having issues with fuel subsidy. So how much more complete transition towards cleaner energy sources? We haven't fully,
apocalypse.
Exactly, we haven't fully integrated wind energy here, even though we have some states that we have some states that we could actually do stuff on wind energy here in Nigeria, but the infrastructure has been dilapidated. We're not seeing so much progress there. Then we're looking at LNG. We're still having issues with gas flaring. We're still having issues with gas exploration and then the refining of gas. I mean, for a country that we have enough gas coming out, but the fact that we have to we're still using gas, for our electricity grids and all of that. But I mean, we're producing so much that we have to export to other countries, but yet we're still having issues with
domestic.
Our domestic. To tell you that there's a lot of issues in the fossil fuel sector here in Nigeria that still needs to be addressed. We're still having issues. We're still having talks on fuel subsidy. We haven't seen the PIA come fully into maturity here in the country. So there's still a lot of issues to one, and this is not only happening in Nigeria. Other African countries, especially in sub-Saharan Africa, are facing these issues as well. So it's going to be it's still going to take some time before we see low to middle income countries like Nigeria completely adopt this.
Yeah, so it looks like it's going to be a long time.
It is going to take some time.
Yeah, and we're seeing LNG prices, they're up about 12.30%.
Yeah.
What's driving sentiment there?
Yeah, we're entering into the winter season, and so demand from Europe, it's increasing.
Even though we have that issue with Russia turning off the taps.
Exactly, and that's the more reason why this happens. So we're having increased demand meeting lower supply. So the shock of that, the net effect of that is a surge in LNG price, because LNG is mostly used during this winter period for heating. So while demand is increasing, we also know that supply is really thin right now for LNG, and that's keeping prices higher. And the immediate impact of this is, we're going to see higher costs for heating in countries like the UK, Europe, that are going to definitely experience the winter season this period. The US as well. Demand is going to, the price is going to be high. People are going to have to spend a lot more. But I mean, these countries are taking initiatives to help ease the cost pressure on individuals. I mean, the UK is giving somewhat of an energy palliative to households just to, reduce the cost burden right now, because everything is really increasing. Then we also look at the fact that how does this impact a country like Nigeria? LNG is still Nigeria's top export commodity, one of Nigeria's top export commodities that's supposed to rake in a lot of revenue. So we expect that this increase in price, Nigeria would be able to take advantage of it to generate some revenue. But that doesn't still negate the fact that the LNG sector, from the gas exploration to the to the refining, everything is still having a lot of issues here in the country.
Yeah, and we see South Africa's exports of corn expected to fall. We still have, grain issues, globally. But hearing this now coming from South Africa this fall doesn't look good.
Yeah, I mean, everybody's going through it. The global economic crunch is really affecting several countries, and developing countries at the worst hit. That doesn't negate the fact that South Africa is definitely putting in effort to ensure that the corn exports, is gonna bring in some revenue for the country. But right now they're having issues with weather that's affecting their corn harvest, and that's definitely affecting their exports. But generally in the grain, the world grain industry,
right.
yeah, for lack of better words, the world grain industry, what's happening there is that prices were relatively stable. The UN, the United Nations Food Price Index, remained relatively flat between September and October at about, I think, about 136 points. So indicating that prices are, relatively remaining the same. For wheat, although prices are still higher compared to last month, but it's not as high as what we had in March. So, and that's because the Black Sea Initiative has come in, and that's the agreement between Russia, Turkey, Ukraine, and the United Nations. And the agreement is that they're going to allow Ukraine, supply the world grains, through the Black Sea.
And expiration is close.
Yes, in 2 weeks' time. But I mean, for now, we've seen that initiative did have a positive impact on food prices. We've seen wheat prices, trade lower, corn prices as well. Some oils like rapeseed oil, sunflower oil, we've seen them, come back into the market, and that has helped to taper prices generally. Even the price of cereals are not as high as what they used to be before. And the expectation is that they're already having talks for a renewal. They're already having talks for a renewal, and the expectation is that, Russia doesn't back up, because there was a militant attack on Russia, and it was supposedly from Ukraine, and then Russia suspended, its agreement on this Black Sea initiative, and that completely affected the arrangement for just a few days. So imagine the shock if this agreement is not, sustained for the nearest term. We all hope that this war comes to an end.
And that's why we see, a country like Egypt, calling for an end to the war.
Yes, because like I said, the war is affecting everybody, but for countries like for developing countries and emerging markets, that they are worst hit because we have more of the poor and vulnerable within these countries. The inflationary pressures are a lot. I remember that the global economy is adopting monetary policy tightening right now. So it's not exactly a friendly move to other countries that normally, when inflationary pressures are this much, when they're having reduced revenue, they run to these big guys to get some money. But right now, the big guys are actually trying to mop up excess liquidity by increasing interest rates, and investors are like, hey, if the UK is doing this, if the US is doing this, their currency, it's a lot better for me to invest in the economy right now. And it's fixed income instruments that are having an increase in interest rates, so they would rather flock they rather flock these advanced economies and pull out funds from emerging markets. And a typical example of what we're seeing right now is what's happening with the NGX. We've seen it, we've seen thin trading happen. We've seen the all-share index decline, and that's just a typical example of what happens when the big guys increase interest rates and inflationary pressures are just so much.
And obviously the central bankers are still looking at more
exactly. The US
rate hikes going forward.
Aggressive with this. Although Powell did say that the coming interest rates might not be as aggressive as 75 basis points, but it's definitely going to still continue. And that shows the priority right now of the advanced economies, that they're planning to tame inflation just so that, first of all, the currency doesn't begin to lose so much value, and then people are not interested in holding these currencies. They wouldn't want to move to safe assets like gold. They still want to hold hard currency. And number two, they're trying to do that to also alleviate, the current situation of inflation, because inflation erodes purchasing power. The $2,000 that you would have in hand, or normally that would sustain you for your bills, and you still have a little money to probably have some fine dining in the US, but that's not happening right now.
Right.
And they want consumer spending. They want consumers to feel better. They want to alleviate well-being. They're gunning for an increase in economic development right now. They're pushing for welfare.
Even though they're destroying demand with the rate hikes.
Exactly. But, and then we look at here where economic growth is still the core of the issue. We're still looking to expand business. We're still looking rather at the expense of, well-being. Even though it's not as aggressive as it, but the truth of the matter is that everything that is happening, we're looking at inflation being imported here. We're looking at also other structural factors that are affecting inflation. Consumer demand is low. So everything is, a typical example with the impact of what's happening globally and how it can affect completely, overturn economic happenings or economic activities in a country. Nigeria is a perfect example. And so, like I said, everything is just going to keep, the developing nations are still going to keep struggling. I remember that it's more of a trifecta effect right now, because we had not fully recovered from COVID-19 before the war started, and then now we're having monetary policy tightening, in global economy. So
Right.
Nigeria is losing money. Our currency is falling, the value of our currency is declining.
So much to unpack,
happening.
so much happening. Thank you so much, Zumebi Oluwole, Analyst, Financial Derivatives Company. Thank you so much for your insight.
Thank you.
All right, we'll take a moment now. And now to our next conversation. With over 2 trillion naira in circulation outside the banking vault, according to the governor of the Central Bank of Nigeria, how can the existing strategy for financial inclusion be optimized? What role does virtual cards, or do virtual cards play? We have Ademola Okule, head of SMEs at Cellulant Nigeria, joins us now for this conversation. Great to have you on the program.
Thank you very much, Ladi. Thank you for having me this morning.
Yeah, so one of the hottest topics right now is the CBN's plan to redesign some denominations of the Naira. How does this fit into the, virtual card space?
Okay, I'll start by just giving you an overview of what a virtual card actually is. A virtual card is just basically the digital version of a traditional plastic credit or debit card. They contain the same card details as their physical counterparts, like your card number, expiration date, and of course the CVV code on the back of your card. But there's, in terms of the virtual card, while transacting on the virtual card, you don't actually need a physical card to swipe or put into a card reader like your regular POS terminals are available out there. So it's just a digital form of that, but the interesting part of it is that there's a security feature whereby when you go onto a merchant's website, you don't have to actually put in your card details. So your card details are not stored, so it gives you that extra comfort of security while transacting from your place. So that's basically what a virtual card is. So, but in terms of how it fits into the CBN's redesigning of the Naira. Basically, the redesign of Naira has a lot of benefits. Actually, part of it is financial inclusion and, of course, improved adoption of digital payments. So with the virtual cards, you don't actually need you don't need cash. You don't need access to cash while transacting. So it helps in terms of CBN's long-term growth of actually putting a lot of monies back into financial institutions. So this would actually aid CBN's goal to have a cashless economy and also drive financial inclusion.
But how impactful is it really for, financial inclusion? Because we know the unbanked to still have a huge, portion of the unbanked at this time.
Okay, so financial institutions would be forced to actually improve in terms of account creations for the financially excluded individuals of the country. Because the impact of virtual cards basically is it helps the government. In a scenario where there's an emergency, like what happened during the COVID, and the government wanted to actually provide COVID relief, it would have been easier if the targeted people had virtual accounts. So all they need to do is just fund those virtual accounts, and those people have access to the funds to do that. So it's something that if the financial inclusion policy or the process is improved, virtual cards would be a good source of payments for government welfare schemes, that they have quite a number of them. So instead of cash distribution that has been happening, there's no accountability for that. But where individuals and citizens have access to funds from the government, it improves financial inclusion when you know that you need to have this kind of account for you to benefit from government welfare schemes.
And it looks like it mostly benefits, online, transactions, talking about virtual cards now. No added advantage, maybe if I want to go to an ATM and somehow just, input my details and somehow my virtual card can come into play, on an ATM. Is there any kind of, development coming in that direction?
Oh, yes. Virtual cards, yes, mainly for online transactions, but the offline option is there, whereby you even walk into a store and you have your virtual card on our app. You've downloaded the app, you've created the card. In creating the card, you have immediate access to the card, and the card is ready to use. So it's cost effective. You don't have to actually walk into a bank and do the process. But in terms of what you said, there's the offline version where some shops, or not just shops, retailing outlets give options, loyalty schemes where they create virtual cards for their customers, and these virtual cards can be used in store. So the offline version is actually available for virtual cards.
All right, but how quickly are MSMEs adopting, digital payments at this time?
Okay, in terms of digital payments, consumer behavior has changed. So for you to succeed as an SME, you definitely have to adopt payments. So the adoption has improved astronomically, which is, of course, post-COVID. A lot of SMEs were not prepared for this, and as a result, those that did not move quickly lost a lot of income. So post-COVID, we've had that enlightenment, and the adoption rate has been quite synonymous, quite outstanding, sorry. In Africa, there are over 100 million SMEs operating out there, and just less than 5% are digitized. But because of consumer behavior now, SMEs are forced to adopt digital payments. So the acceptance has been quite phenomenal in Nigeria.
And, in recent months, cardholders have faced poor network connectivity, transaction failures that take weeks or months to even resolve. What would you say is the solution to this?
Okay, it's basically infrastructure. There's a lot of investment into e-commerce infrastructure, but we're still far behind in terms of that. You see a lot of SMEs going through downtime. Sites are quite slow when you're trying to do transactions. Then the security of your cards are not as transparent as you want to be. So yes, there are a lot of issues around this, but it's basically infrastructure. But if you can see recently, a lot of e-commerce businesses are investing a lot in e-commerce, and this is giving opportunity for a better, in terms of services, and customer delight is actually improving as a result of this investment.
What about the risk of hacks? We know, the online environment, we have hackers all over the place attempting to compromise your account, in any way that they can. How safe are virtual cards?
Okay, so virtual cards are quite safe compared to your physical card. One of the key additional securities that you have with virtual card is, if I go onto the website of any e-commerce business, unlike the physical card, I don't have to impute my card number. So what happens is, every time you transact using your virtual card, there's a unique account number that is created just for that transaction. So obviously, by the time you're done using that transaction, it expires. So there's no harvesting of information. That's why the virtual card has that added security advantage over the physical plastic card. And also the limits, both for FX and Naira, are quite flexible.
All right, so what are you seeing going forward, for adoption, virtual cards in Nigeria?
Okay, one of the things that boosts the adoption, obviously, is CBN's recent policy, redesigning the Naira. And the next 100 days is going to be a bit chaotic, both for consumers and owners of business. So when you know that, at the end of the day, as a business person, you know that, okay, in the next 100 days, there's going to be a change in the Naira. Why still lay a lot of emphasis on cash collection? So obviously, the quick move to digitization of transactions also lead in improved adoption of virtual cards, because why would I want, knowing fully well what is going to happen, why do I need to go to the ATM to withdraw cash to do a payment? So we'll see a lot of activities with regards to virtual cards in the next coming weeks and months. All
right, we'll keep watching and see, how adoption grows, going forward, for virtual cards. Thank you so much. That was Ademola Okuleye, Head SME Sales, Cellulant Nigeria Limited. Thank you so much.
All right. Thank you very much for having me today.
All right, now we have to get to the markets. Yesterday, Will was right there for the first physical trading, the NGX trading floor, and she's back here now to tell us how it went down right there.
Good morning.
Good morning. Welcome back from the floor.
Yes, it's good to be back on the floor. As one of the stockbrokers said, the flavor of trading on the floor.
Right.
Physically having that interaction with your colleagues. Trading remotely has been like, they have had this gap that they've had to fill in terms of information and things like that. But when they're on the floor, they feel they can get the information readily at their fingertips because their colleagues are there to help them out where they feel
and one thing I see about the floor too, or where traders congregate, one person could just, say one thing, maybe it sounded like sell, and everybody goes, oh, sell, and it goes.
And they all sell. So it's kind of fun. That makes the buzz of, the trading floor. That's actually what we want to see back, and the energy that they bring to it. So that's what we're hoping to expect, and we hope that translates into a green pump for the market.
Right.
But we're seeing mixed reactions yesterday for the market close. It was flat, but positive, 0.00%, just micro percentages that were up yesterday. 44,269, still that's the all-share index we are at currently. Market cap is still at the 24.112 trillion naira. We're hoping that the market, boosts up in today's trading session. Now we're seeing the volume, value, and deals yesterday mixed. No, not that it would mix. They were in the red yesterday compared to what we had for the week's close. Now, if you see that sectoral performance, it was kind of mixed. Banking and industrial goods were up yesterday, except for the consumer, insurance, and oil and gas sectors, which was down yesterday. Now, we had banking, it was boosted by Zenith Bank and Access Corp, but that didn't, the losses we saw in Gerugu yesterday was strong, so strong that it upset the gains we saw in Access Holdings and Zenith Bank. So we're going to bring in Abdurrashid Momo if he's there to kind of tell us what's happening in the market. But before that, we just see the NASD market very quickly. We saw that it was unchanged from Friday's close. The index is still at 720.36 points. Market cap now around 46.7 billion naira, still struggling to achieve the 1 trillion naira mark that we're used to in the marketplace. Investors are probably still wondering how the market is faring. Volume was quite low, 73,646 deals, 4.19 million naira traded in value, and all in 4 deals. It's quite a big market for the NGX. For the NASD unlisted equities market. But we're going to go to the NGX where Abdurrashid Momo is trader at TLW Stockbrokers. He's waiting to give us more insights as to what's going to happen there. So we're still waiting for Abdurrashid. We're going to go to the fixed income market where we saw a bit of quiet trading yesterday, but we saw lots of demand for the 2032, 2027, and 2037 papers. There was some demand for the 2024 paper, but just due to, not enough demand, not strong enough demand, it landed in, the less deals was consummated for that paper yesterday. Now we'll move to the treasury bills market. We still saw a bit of bullish sentiments coming back to that place, but yields are dropping in that segment. I think people are beginning to trade cautiously because of the NTB auction that is going to happen tomorrow. And also there's going to be a rollover for the OMO segment of 15 billion naira to be rolled over in the OMO segment. But we're thinking that investors still believe that is not enough to, show up liquidity, but we saw the FAC inflow last week, which kind of boosted liquidity, and that's why probably we're seeing yields going down, because there's a bit of money in the system for people to play with, and then, there's not a lot of demand as before. There's a lot of demand, not a lot of sell-offs going on as before. So we're hoping that the market gets boosted, in tomorrow's trading session. We're going to see how that pans out for the investors and for the markets in general. Now we're going to move over to, I don't know if we have Abdurrashid now. Okay, so we're just going to look at how that market is faring. But Ladi, we're looking at what investors are thinking, trying to picture what is going to happen for the fixed income, how it's going to pan out, because with interest rates rising, inflation expected to go up to 21%, in the next reading. We don't know how investors are going to play for the equities market.
Yeah, and most investors trying to beat, inflation now. And if you cannot beat inflation, with fixed income, you can't go to equities.
You can't go to equities.
That's even more volatile. So it's a tough choice.
Yes, it's really a tough choice
for investors at this point.
And if liquidity keeps getting tighter, there's still the squeeze that we're seeing in the fixed income market. I wonder how that's going to work, because the yields are not even up to what we're expecting. But investors are still there because of macroeconomic factors.
At least also you're getting something.
At least they're getting something, and money is not getting devalued as fast as the Naira is going down. So at least there's a safe haven for them, and they're expecting that probably maybe the elections, post-elections results is going to give maybe policy directions, steer them in the right direction.
You're trying to stay in cash.
It's staying in cash.
Devaluation is a risk
and then now the dollar, even the scarcity of the dollar is really high right now. What was the last reading we had for the dollar in the black market? Was about
the market we don't like to talk about.
Yeah. It was really high, and that's really where you actually get the dollar, because trying to get it in the official market, I think it's a bit of a struggle.
The hurdles.
It's a hurdle.
Yeah, the hurdles there.
Big struggle right now. So a lot of things are going on in fixed income space, but investors are still trading cautious. That's the word out in the fixed income market, caution. Even in the equities market, when I spoke with the head of the president of the Chartered Institute of Stockbrokers, he was talking about the macro, highlighted some of the factors and which we've heard on the program earlier, talking about the headwinds that are happening to the market. Scarcity of the FX was one of the big things, the big elephants in the room we mentioned. And we're hoping that if that continues, or we're not hoping that it continues, because we're going to see a drop in investors' interest in these equities, not just for local investors, but for foreign investors as well. And I also spoke to the stockbroker, and he was talking about the same thing, that if we up our technology, it will also enhance players, international players, to play into the market. But I think if we kind of up our game there.
We've been doing it without them for a while now.
Well,
in the equities market. We've been doing without.
Yeah, we did see a lot of domestic players coming in and pumping the market up, but we still need a bit of that.
Now we have a downturn.
Yes, we still need a bit of that flavor from the international space. And that will bring in the FX inflow. But with the scarcity of dollars, I don't know how that's going to work out.
So much for investors to deal with.
I don't know if we still have Abdul Rashid to come up and tell us what's happening in the market. I don't know if we have him.
All right.
So
looks like we don't have.
It's like we don't have Abdul Rashid to give us what's happening in the market.
Oh, okay, we do. I hear him.
Oh, Abdul Rashid, are you there?
Hello, I'm here.
Okay, Abdul Rashid, it's good to have you. Abdul Rashid, we saw yesterday, stockbrokers were pumped in yesterday's physical trading on the floor. I was right there, I saw the energy coming out, and then they spoke with so much nostalgic feelings about how the bonding that takes place in the market. But how do you see the market faring? We've seen some impressive Q3 numbers come in, but we're not seeing enough of that pump. We're not seeing enough of that drive. What's actually not the give in this market? What's not making investors put their money where their eyes are looking at?
You don't have to tell a layman what's happening in Nigeria now. There are a lot of, it's not only Nigeria, it's more of international. But we seem to take it very, very personal in terms of, the social media and everything that's happening. But the only thing I can say that those financials have been, and what came out for Q3 were fantastic. We didn't even believe we were going to get such positive results. But as we always say, the market is a discounting mechanism. It takes time to actually assimilate what's on ground. I know with time, people are going to come through. Why I say that I always tell you that the market, there are always two players in the market, the investors and the traders. For traders, it's not friendly because prices have been doing lower lows. We've not seen any new high. But for investors, good time for them to, as prices are going in, coming down, they are buying. If they have fixed income they use, like some clients that actually have monthly inflow in using buying shares, they now buy more of those shares with the same price. So for now, what we are seeing, we can see increased volumes in some sectors, I think the banking sector. But what's happening is that market price actually range bound for now. I've been keeping tabs on the market lately. I don't know, I always mention GT, Zenith. We've seen that they've been range bound for some time. UB has been range bound for some time, between 7 to about 6 Naira plus. And again, take note that no matter how it is, for the past 15 years, December has always been a turnaround for the market, which we call actually the Santa Claus rally. So I think there might still be a bull. Despite the fact that we are still in a downtrend, we might see some flashes of the bull market take place. No matter it. Yes.
Okay, so are you positive that the Santa rally is going to take place? Because the market seems to be dropping faster than it's going up. What do you think would trigger this Santa rally if we're not impressed with the Q3 earnings that we see already?
Well, it's always, December is always here for a lot of companies. We call it window dressing. So likely, it has not failed. Let's see if it's going to fail this year. Even when we had when the market was bad during the bear time, when we had the crash, the December actually pulled out some, we actually saw some, it's going to be flashes of bull rally. And I think it happened, I think 3 weeks ago. You saw stocks like GT go to about 16 to about 18 Naira plus, and it came down. So likely it's going to happen again, because we are beginning to see small volumes coming in and out, price range and everything. It's interesting because, as I always tell people, everybody makes money in the bear market. And in the bull market. Only few people make money in the bear market. So definitely we are going to see that happen.
Thank you so much, Abdurrashid Momo, trader, TLW stockbrokers. We're looking for that turnaround. We'll look forward to keep an eye for that turnaround in the market. Thank you so much. And Ladi, that's how we end today's update. But we're hoping that at the end of the day, we're going to see a better close than what we saw
all right,
yesterday.
we'll be looking out for that. Thank you so much. Thank you. All right, we'll take a break now. When we come back, we head to London. That's the moment to stay with us. Welcome back. Let's head to the UK now. Let's talk to Juliana right there with the details. Great to have you, Juliana. So I see Macron and Rishi Sunak are striking a deal to tackle the migrant crisis. Tell us more about this.
Good morning, Laddie. Yes, well, we know that the Home Office is currently facing a judicial review over how migrants are being processed at a centre called Manston, which is just near Kent. It's a huge story in the UK at the moment because local council leaders have said they're literally at breaking point, that they have no funds to look after these migrants. We know that 40,000 migrants have come into England from the Channel, from these small boats this year alone, which is the highest on record, and is something that has led to, so many people asking for the Home Secretary, Suella Braverman's resignation. Now, we know that COP27, of course, is taking place in Egypt. Yesterday at World Leaders Day, Rishi Sunak, the UK Prime Minister, did manage to have some time with Emmanuel Macron, the French president. And according to both sides, it does appear that miraculously there is an improvement in French-British relations that we know, of course, was strained under Boris Johnson and were made even worse under Liz Truss. But according to the Home Office, there is going to be a deal struck between France and Britain to ensure that there are more French border police patrolling the beaches, as well as making sure they're cracking down on human traffickers. This is costing the British taxpayer billions of pounds every single year, and it's a topic in this story at the moment. So it's good news that there appears to be some sort of deal being struck between the two nations.
All right, I guess we'll keep tracking that deal. We see data out now, UK retail sales. How's that looking?
Yeah, we have had data from the British Retail Consortium showing that retail sales are slowing as to be expected. There was growth, but it was just a 1% growth. Really, Laddie, just doubling down on what we know about the cost of living crisis in this country and the fact that consumers are pretty stretched at the moment. We also had separate data from Barclaycard. They've surveyed their card users, and 49% of those they surveyed said that they are going to be spending much less at Christmas. So we are supposed to be going into a pretty lucrative time of the year for retailers, but it is going to be difficult, even though there is no threat of Omicron that's being published by the media, and people are able to go about freely. It does appear as if, things are going to be tough as Britain is in a recession. We think we're going to have GDP data on Friday.
Right. Well, I guess the central bankers would like, to see, that's happening with the rate hikes and all of that. Thank you so much, Juliana. We'll talk to you later on.
Talk to you later.
All right, now let's move on to other markets. Now we see the crypto space there. Massive sell-offs in the markets this morning. We see Ethereum failing to hold above the $1,600 level. Started a major decline below the 1,500 level. Let's look at the sentiment in the market this morning. There, CIS31. Fear. We're still seeing fear in this market now. 31 points. Looks like we might be inching, back to extreme fear if this sell-offs actually continue in the market. Let's look at the market cap there. 975 billion, lost the $1 trillion mark, down 5.53%. Let's bring in Olumide Additional now, financial market analyst. Hello, Olumide.
Hello, Laddie.
Yeah, morning. Massive drop. I'm sure investors didn't expect to see this today, but it looks like it's the battle between, Binance and FTX weighing on the market right now.
Yeah, that's very true. If you look at just data from CoinGlass, tells you that over 180,000 traders have been liquidated and taking long bets on the crypto market. And that was pretty much because if you look at prior to the battle between these two giants, crypto sentiment has been quite bullish with growing adoption and the fact that many interesting developments have been coming to the space. Binance recently even announced the fact that they will start accepting Naira deposits, and understanding the role Nigeria plays in the crypto ecosystem. That was some high positivity, but that was brought down because of, like you rightly said, the battle between the two giants, and that really hampered when FTT suffered a lot of selling pressure. In fact, as we speak, it's down 23% for the day. Bitcoin lost $800 pretty much in minutes. And, trouble started when, Alameda, one of the affiliates of FTX, was reported to have had some systemic exposure that would really bring out the similar lunar crisis. Though, the quarters from the executive tried to clear those rumors, market expectations were not moving towards that line, because CZ announced that they were selling their positions, and that was what over half $1 billion Latin. And understanding the effects Binance has on the ecosystem with over 120 million users, one was not pretty much surprised that really created market contagion. And within overnight on Monday's trade, we saw that sell-offs from Solana, FTT trickled down to Bitcoin and kept going down. And that's where we are right now, Laddie.
All right, Lumida, we see Bitcoin there losing that 20K level. It looks like there's more downside risk going forward.
Yeah, it's market clouds right now. And, with the U.S. inflation data coming out on Thursday, one will be very cautious to make any bullish bets. But we'll see how it plays out. We expect that tempers will tamper down, and we expect that the market will readjust. But, we are really looking at the U.S. mid-election outcome. A possible win in the Republican might bring back risk on sentiment, because the Republican Party is often known for less market interference. So a lot of things around the markets right now, Ladi. So it's difficult to bet whether Bitcoin might keep back above the $20,000 support level.
All right, Olumide, we'll keep watching to see how the market actually plays out this week. Thank you so much, Olumide Additional, financial market analyst. Let's look at the top alts by market cap. Though we see Bitcoin there, 19.8. Top alts market cap all in the red, with XRP there, the biggest down 6.51%, closing at 43, trading at 43 cents. And we see BNB there, $326. So it's a bloodbath we're seeing in the market, even though we thought the bullish run has started, but the headwinds still remain in this market. All right, that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated. More updates and developments in the world of business. Don't forget, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, move to our videos. You can see all our other productions. Thank you for watching. I'm Ladi Williams. Bye for now.